Today, everyone calls themselves investor. Person who's applying for each and every IPO thinks he's an investor. A person who's randomly buying cryptocurrencies, there are around 2000 cryptocurrencies, and he's chasing the latest cryptocurrency, he thinks he is an investor. Somebody who's building a cricket team on the mobile app or playing rummy, he thinks he is an investor. Somebody who's chasing tech stocks because the returns are amazing, he thinks he's an investor. Somebody buying mutual funds based on past performance, especially last 1 year performance, and buying mid cap, small cap and sectoral funds, thinks himself to be an investor. In fact, the person who also goes to a casino thinks that he's in control and he thinks he's an investor. A very interesting thing about investments, a very small line differentiates somebody who is an investor versus somebody who's a speculator. Let's try to understand what differentiates an investor and a speculator, and if you speculate, what is that you can do in terms of ruin for yourself and for your family. Let's try to understand what is investments. First of all, investment is something where the odds should be in your favor. The chances of you succeeding should be much higher than your opponent. And that's why casino is not investment at all, because the odds are never in your favor. The probability of you succeeding is never higher. The probability is always higher on the other side, and that's why the casino or the house always wins. Now let's come to stocks and investing. And to explain this, let me take a simple example of three friends, Raj, Ravi and Simran. Raj is somebody who just in the last 2 years, because markets are doing well, and he has seen that when you buy an IPO, IPOs do very well, they get oversubscribed and you make good hefty listing gains. He has been doing it successfully in last 2 years and he thinks it's an amazing strategy. He's not concerned about the company, he's not concerned about the balance sheet or the business. His logic is simple. Apply for an IPO and make returns, and this is his logic of creating wealth. On the other hand, there is Ravi. Ravi buys stocks on merit. He buys large cap stocks, mid cap, small cap stocks, and he also applies for IPO but very selectively. He thinks IPO is a new company which is there, but he doesn't believe that all IPOs are good. Only based on his research, only based on valuation, only based on if the stock fits his entire portfolio, he's buying and applying for those IPOs. And third, Simran, she thinks, you know what, I don't understand stocks. She's honest to herself. She says, I don't understand economics. I don't understand what's happening to the markets, the balance sheets and things like that. All she understands that equity creates wealth from a long-term perspective. Her horizon is 10 years plus, and she has outsourced it to an equity fund manager. Like a classic debate, there was a stock, Zomato, and there was a lot of debate. Is it a good stock or a bad stock? And Simran's thought process is very simple. She says, I don't know whether that stock is good or bad. I have given money to a fund manager. If a fund manager thinks the stock is good, he or she will buy that stock. If a fund manager thinks that the stock is not good, he or she will not buy it. That's what is a simple framework of Simran. Now with this example, try to understand who is speculating. Raj has got good outcomes. Just because the outcomes of last 2 years is good doesn't mean that he is not speculating. The day market turns, it's quite possible a majority of his IPOs might lose money. On the second side, Ravi, he's investing because he's doing his research, he knows the pros and cons, and he's buying stocks on his merit. And Simran is also investing because her horizon is long term. She knows equity is risky, but she also knows that she is not good in finding stocks and she has outsourced it. So with these examples, you are able to understand who is investing and who is not investing or speculating. Now you might say, okay, the conclusion seems as if only when you put money into mutual funds, that's not called as speculation. That means people don't speculate in mutual funds. And the answer is yes and no. Mutual funds are something which are an amazing vehicle, which especially equity mutual funds, which can create wealth from a long-term perspective. But if you have a wrong horizon, then it can become speculation. And to explain this, let me take again an example of two friends. over here, Amar and Akbar, two friends. Amar is basically saving and investing for his goals, which are 3 years down the line. He wants to go for higher education abroad and he's investing for that. Now, Amar is seeing that the returns of equity market are very good and he has put all this money, which for a goal which is after 2 years, 3 years, he has put into equity. On the other hand, Akbar, he's basically planning for his goal, which is 10 years down the line. He wants to buy a house and for that he requires money. And he's planning to buy a house after 10 years. He requires money for the down payment. And he wants to do an SIP and lump sums over 10 years. Now, both of them have chosen a simple flexi cap fund. You might say, fine, it's mutual funds, so both are investing. And the answer is no. In the first case, Amar is speculating. Maybe the investment vehicle is good, but his time horizon makes it speculating. Because in 2 years or 3 years, anything can happen to equity market. Equity can give very good returns from here, and equity can also crash and give negative returns, or it can give moderate returns, and it's also possible that equity gives no returns. So a wide range of returns are possible. Since the goal of Amar is very near, it's 2 to 3 years, investing into an equity mutual fund is speculation. But on the other hand, Akbar, his investment horizon is 10 years plus. Equity is risky, but since his horizon is 10 years plus, the odds of his success are much more higher. Because in a 10 years horizon, if you look at history, data shows that his probability of making returns higher than inflation are very high. As the time horizon increases, the probability or the odds are in the favor of the equity investor. So it's not the investment vehicle which decide whether you are investing or speculating, but how do you use it also helps you understand whether it's investments or speculating. I hope you are able to differentiate between investments and speculation. I hope you become a good investor. A good investor is somebody who understands the characteristics of an asset class. I just gave you an example of equity, but the same thing applies for gold, same thing applies for fixed income, the same thing applies for any other asset class. Understand the characteristics of an asset class, understand what can go right, which is returns, and what can go wrong, which is a risk, and what is a worst case scenario which can also happen with an asset class, so that you are mentally prepared and at the same time you have a right asset allocation to deal with those situations. And this is how you differentiate between investments and speculation. Happy investing, stay invested.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.